Wow. What a move this morning. Now, here's some good news. Anytime we see a big move like today, we pretty much know exactly how to make money the following day. I definitely have some bull traps I'm watching for tomorrow. And if we're lucky, maybe a nice juicy double bottom bear trap reversal. Don't you worry. I'm going to cover all my favorite trades in the video tonight. I want you guys to have a roadmap to make some money on Wednesday. Before we jump in, though, and talk trades for tomorrow, get our hands dirty on these charts, I'm getting excited just thinking about it right now. Before we dive in, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so hit that subscribe button. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comments section below. Thank you so much for tuning in, supporting our channel. Let's go make some more money on Wednesday. Been a great week so far. Charts are all ready to go here for tonight. I got the Nasdaq triple Qs are ready. Oh, we got the E-mini and the SPY is ready. I have three pretty simple clues on these charts tonight that tell us pretty much how to make money tomorrow. One of those clues is right on this 60-minute time frame in front of us, and you'll notice right away we have big moves in both directions. Big move up on the E-mini, big move down, big move up, big move down. Whenever we see big move, back and forth like this, usually that means there's a range. And as most of you guys know, if you're taking my free video classes, we know ranges act like magnets. So boy, oh boy, are we in a very critical area right now. Will this range drag this market back up again, right? I definitely have some long side trades because of that for tomorrow. Or you know what to say, right? Are we done? Is this bull market done? Will they hold the underbelly of that range and run lower? This might be the end of that bull market. Don't you worry, though. I have ways to make money on the long side and the short side. That way, no matter what happens tomorrow, we'll have a game plan for this. This is one of the very important clues we see in the charts. I have two more clues, though. Two more clues that I think will be better for the entry timing. You know, the 60-minute time frame is good for the overall big picture, but timing the entry, actually putting the timing together, I got two more clues we'll grab in a moment on the tick charts. Before we do that, though, let's check schedule for tomorrow. Two things on our radar for tomorrow you want to be aware of. First one's first is the ISM Services Index number at 10 o'clock Eastern Time. We know the Fed is watching the jobs market closely right now for when they'll cut rates. Maybe not even this year at all. Maybe not until early next year. That's definitely what I think is the biggest market catalyst for tomorrow. Anytime we have big news at 10 a.m., you best be prepared. Later on in the day, we got J-Powell back in the microphone at 12:10 Eastern Time. This is not a testimony. It's a roundtable discussion, a keynote speech. You know, we always have to pay attention whenever Jay Powell speaks, but I don't think that is going to be our big market catalyst for tomorrow. Jay Powell, pretty much all of the FOMC crew, they've said the same thing over and over again. They need more data points before they can make a commitment on when they'll be cutting rates. Data points such as the services number tomorrow morning, data points like the jobless claims report on Thursday, and the king or queen, the big kahuna of all data points is the employment number coming on Friday. I don't think Jay Powell tomorrow afternoon is the big catalyst. I'll be watching that 10 o'clock ISM services number with you guys tomorrow morning in our trade room, so make sure you keep that on your radar. Now back to our charts, though, because it's good to know when the news is, right? But the money is made on the charts. We talked about a moment ago that 60-minute time frame, big move. That trading range, will they swoop right back in the range, or will this be the end of this bull market? We're going to find out tomorrow. The good news, though, is I think I get a pretty good roadmap to make money no matter what we get here for tomorrow. The 60-minute time frame gives us very important overall clues, but let's now talk about tick charts, because tick charts are kind of where the entry timing all comes together. This, of course, is a 7,000 tick chart, upper left-hand corner. And if you're watching for the first time right now, folks, this is a 21 EMA. It's one of the only indicators we need to use each day to find lots of winning trades every morning in our members trade room. There are two more important clues on this tick chart. One of them is this big move down. Now, big move downs, why are big move downs important? Well, big moves overall. anytime we see a big move like this, we have to assume that sellers are not going to want to sell low. They're going to want to sell high. And so whenever we see a big move like this, we always expect to get a two-legged pullback and a retest of that low. Now, once we get back to that low, will we get one of those double bottom reversals? I definitely have that on my radar for tomorrow. Or will we get a big pendulum swing? Second clue on this chart is the bear move down into a trading range. Now, if you're taking my free video classes right now, you know that ranges act like magnets and they love to rotate. So if the bears get what they want tomorrow, they'll get that two-legged pullback, that run back down. We won't stop at that low. We'll run all the way down to that pendulum swing. And this opens up a bunch more opportunities for us, because oftentimes when you get this much momentum rolling off the high of that range, there are breakout pullback opportunities. I've got some buy-side trades, definitely breakout pullbacks off the underbelly of that range. And again, potentially, remember, we're not quite bearish yet, right? Again, below that big range on the 60-minute time frame, I love the idea of double bottom reversals below that trading range. So there are plenty of ways to make money. Why don't we start first, though? Let's talk about that short going back down, because again, it's a big move down. It's a two-legged pullback. Now, remember, when I say two-legged pullbacks, in the free video classes, we talk a lot about measured moves, right? So A, B, C, D, a little bit more than a measured move, right? So we're getting up in that area right now where you would think that bears will now become more active here and look for that short back down. The hard part, though, is on a big move like this, sometimes these will keep on going and going and going and then come crashing back down. So it can be difficult to kind of pick that top or time that entry. So in order for me to time the better entry on this, I'm not going to pick a top, or I'm not going to blindly, because again, this may keep on going all the way up and then come back down underbelly of that trading range. In these situations, what I'll do is I'm going to use basically a bull trap pattern. Now, bull trap patterns, there's actually one right there, right there. We talked about this last night on the video. When we start seeing this thing pull back right now, I want you to look for what's called a bull trap pattern. It's buyers trying once, it's a lower low in price, buyers trying twice, and a move just a bit above that swing high right there. Strong red candle closing below the 21 EMA, and that is your bull trap pattern going lower. If you look over here, right, we go up, right? The buyers try and put it once, they try again, lower low above that high, and of course, right, that is the same basic idea I'm looking for over here. Now again, it could be up in 1, 2, the key is you want that lower low in price, that bull trap high, and the run back down again. So just be aware, it could be anywhere really in this whole area here. That's why we don't blindly sell these areas. We wait for it to pop up, we get the rookie buyers coming in, have them buy high, and then that will tell us now where their stops are. And we can use their stops to fuel that move, right? Going back down to retest low. So lower low in price, above that high, strong red candle, closing below the 21 EMA. It's the same rules we teach in the free video course for a bull trap. Now, that is kind of the ideal scenario. We don't always get that nice, clean bull trap entry pattern off the high. What is also very common is, and again, because of this big move we saw, it may end up running a bit higher here. It may run out of gas, if you will, and V-top off that high. Again, I would love to get the buyers trapped up here and short into those stops, but I may not get that entry. We may end up squeezing up and then snapping back down. When that happens, we don't want to chase after it, because we want to sell as high as we can, right? Sell high, don't sell low. And to do that, we'll look for what we call the V-top reversal. These are very, very common, especially in kind of these wild markets we're seeing right now as the Fed tries to figure out when they're going to cut rates here. If it V-tops off that high, again, not ideal, but we want to make sure we're ready for it no matter what the market throws at us. If we V-top off that high, draw a trend line off those lows, mark it up around that high, all right, and then watch closely. Look left, find some prior swings. What you want is you want to combine one of these prior swings here with the top of that channel. We want to get those bull traps. This is basically just one variation, right, of that bull trap pattern, right? Same idea, right? It's a lower low in price, a move just above a prior swing, strong red candle, closing underneath the 21 EMA. Again, that's kind of a variation of a bull trap pattern. Now, one thing I'm not expecting as much tomorrow, but keep in mind, right, if we went up, pull back, double top of some sorts, right? A double top reversal could also be used. Again, think about that one try, two try, that bull trap right off the high, or a double top could also be a V top, right? Comes back down, grinds down, and grab that new channel and look for that again off the high there. I want that first test, right? That first test, if it V-tops off the high. And guys, this could be any entry pattern we learn in the free video course. It could be a bull trap, like I'm showing you here. It could be a buyer failure pattern. Oftentimes, these will get just a little bit above the 21 EMA. Buyer failure pattern, failure pullback combination. You guys will know this stuff if you're taking that free video class I keep mentioning. So don't be shocked if it pops up. They try to retest. Remember, right? It's a big move down. It is likely to try to pull back, attract in more bears. Whether or not double top or not, think about that bull trap, that V-top reversal we keep talking about, and that'll keep us focused on the right entries going back down into that range for tomorrow. Now, before we talk about the long side, right, off these lows here, let's slow down for a second, because if you're watching for the first time right now, this might be a brand new language for you. I know most of you guys are making money with this stuff, traps and failures. You've taken my free video classes. I get a bunch of great testimonials every week. I appreciate you guys sending those. But if you're watching for the first time right now, this might be way over your head, but don't you worry. I teach all of these entry patterns. I have hundreds of examples of bull traps, bear traps, double bottom reversals. Everything I'm talking about right now, I teach a lot more detail in our free video classes. I'll put a link up top there for you. Don't you worry. Link up top there. Hit that link that popped up and take that free trading course, because the strategy you'll learn in that short video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best trades are going to be each day. Then I want to help you start making money on your own. I'll teach you 4 of my favorite entry patterns, guys. The markets are way too good right now not to be making consistent money. If you're tired of missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free course. Learn the roadmap we use every morning in our members trade room. It's perfect for someone trying to make the jump into full-time trading. And also keep in mind too, if you can't get the link up top there, I'll put all the important links we talked about tonight, the description of the YouTube video. I'll put the free class links down there. Definitely start there. I'll put our trade room membership links. We trade together every morning at 8 o'clock Eastern time. And also, too, I post a lot of updates on Twitter, charts, psychology stuff, right? Video stuff on Twitter. If you're on Twitter, give me a follow. All the details, the description of the YouTube video. But now you know kind of how to look for that short, right, going down. Big move down, two-legged pullback, trap those bulls in and back down to retest the low. Now, at this point, how do we buy off that low? I love anytime, remember, we're not quite a full bearish market yet, right? This may be the end of the bull market. We're not quite there yet. How do we buy that low? And also, too, how do we trade that big pendulum swing all the way back down again? Let's go to the Nasdaq now. The Nasdaq's getting a bit lonely over here. Here we go, right on the Nasdaq now. The Nasdaq is an ugly, ugly chart right now. But if you know how to trade ranges, this is a dream come true, right? Range-bound markets are one of the easiest ways to make money. We do a masterclass on range markets every video in our free trading classes. So make sure you check out those. The link again, the description. We are once again the Nasdaq. Anytime we see big move, back and forth, big choppy moves back and forth, there's probably a range right in there. And that range acts like a magnet. So yeah, we're definitely bearish right now. There's no doubt about it. But the next couple days are probably going to tell us whether or not the end of the road is here for the bulls, or if this is nothing more than a bear trap down here and run right back up into that trading range. The most important thing right now, though, obviously, is the size of that move down that we saw today. Let's go to the tick charts here now. Again, a 4,000 tick chart. I use a different tick chart on the Nasdaq. The Nasdaq is a lot lower volume than the S&P. Once again, on the Nasdaq right now, it is a big move down. Big moves down tell us do not sell low. Get back above the moving average. Look for what I call a two-legged pullback. Again, think about a little bit more than a measured move, right? So we're right in that area right now. In all reality, probably the best area for shorts, but the underbelly of that range right there. So again, here. This whole area is an area of resistance. And again, when we see those big moves down like that, two-legged pullback, we're expecting a retest of that low. And again, like on the S&P here, that trading range reminds us that we may go a lot further than the retest of that low, because the amount above the range, I can project now below the range. If the bears get what they want tomorrow, they'll wind up all the way back down, take out that pendulum. And I'll tell you, there could be some very good money made buying off that pendulum, because we know that ranges love to rotate back and forth. We saw a great example of that today on the S&P and the Nasdaq for the most part. And also too, I think also too, if we roll all the way off that high right now, that will be a pretty bearish market at that point. The underbelly of the range tends to be a great spot for a short. So I like the idea of possibly a bear trap and possibly a buyer failure pattern off the underbelly of that range. We talked earlier on the S&P, we talked about, again, not being able to pick the top on this, but going up, trapping the bulls in, right, running back down, or getting that V top, right, that grinder back down. So same basic idea applies here on the Nasdaq. The assumption now is, and we've now have found our way all the way back down to retest that low. Now, like I mentioned earlier, on the 60-minute time frame right now, we're definitely bearish right now, that's for sure. But again, I wouldn't count these buyers out completely, right? Because again, back and forth, that's a big range up there. I wouldn't count those buyers out completely right now. Again, we'll know for sure who keeps control of this market the next probably 48 hours here as we go to non-farm payrolls later this week here. So I like the idea of buying that retest, because think about it. Anybody who sells short up here, where's their profit target going to be? For me, it'll definitely be the majority of it will be at that low. All right, I'll leave a little bit of runner for that pendulum swing, but 80% of the position comes off for me right around that low here. So all the sellers who sell high right now, they're going to be taking a bulk of their profit off on the retest of that low. When I get back down to that low, I like the idea of buying, but remember, we're so bearish at that point. We have all that potential for that run down to that pendulum swing. What I'd like to do is try to trap in some rookie sellers here, right? Basically, this is the last place you want to sell, right? You don't want to sell in this spot right here. You want to sell up here, right? So if I find my way all the way down to that low, if I can start getting some rookies coming in here, I'd love to look for what's basically a crown reversal pattern. It's basically a bear trap pattern, right? So bears come in, try once. Bears try twice. Remember how earlier we said go up, buyers once, buyers twice? Remember that lower low and that trap high for that short back down again? That's a bull trap, right? Same idea. It's a higher high in price and a move right below, right, that low. I call these crown reversals in this situation, right? It's basically a bear trap. So bears once, bears twice. Again, I need to respect the momentum of the market at the same time knowing that if I can get some rookies to short down here, if I can get some rookies take the bait on this, I can use their stops, right? I can use their pain to fuel this move back up as we go. Now, if I can get that bear trap with that higher high in price, that trap below that low, if I can get that bear trap, oftentimes we'll find more bear traps. This time they're easier, right? Higher high in price, trap below that low, on the way back up to where? On the way back up, take out that high overhead. So think about these two patterns coming off of that low. We call these double bottom reversals. Anytime we see a big move in one direction, it's a two-legged pullback, short the top, back at that low, take our profit at the low. We don't sell low, we buy low. But if we start seeing rookie traders come in once, twice, we can run those stops, light those stops up, right? Squeeze those stops, whatever terminology you want to use on this. And then if we do get that squeeze off the low, we pretty much know where the market wants to go, and we'll take out that high. On the way up to that high, we look for more kind of classic bear trap patterns. Bear trap patterns. One try for the bears, two try for the bears. And if we're lucky, I always like to look for a channel on these, off the highs, right, off the lows. Oftentimes you'll find a new channel on that, and that is a gorgeous, almost a guarantee winning trade off that one for a bull trap or bear trap pattern, right, off the low of that channel, right? That's a very easy way to look at it for tomorrow. Now, this same sequence can be applied down here as well. So if we end up all the way back down to that pendulum swing, think about that kind of breakout pullback scenario that I mentioned earlier. If we wind up all the way back down to that low, remember, anytime we see a strong or a big move like this, we expect that two-legged pullback and a retest of that low. So once again, I'm not going to pick the bottom on this, because for all I know, it'll keep on going lower, right? The minute I try picking tops and bottoms, the minute I go back to making rookie mistakes and lose the money like rookies do, right? I'm going to go in and try to trap in some of these bears with that crown reversal pattern, that bear trap pattern, bears once, bears twice. We do not want to sell down here, but if we get lucky and we get some rookies trying to short down here, that bear trap pattern, right, that crown reversal pattern, we call it, in these situations, is certainly going to be my favorite trade. Then we may hold the underbelly of this range, and what you do in these cases is look for what's called a failure pattern. So bears once, bears twice. Think about where their stops are. Use that two-try failure pattern. We call these failure patterns in our free video classes. Now, there's a small difference. Just keep in mind, right? A bear trap pattern has a break below that low, right? Higher high in price, trap below the low. A buyer failure is just buyers once, buyers twice. In this case, I can be a lot more aggressive with a buyer failure pattern because we have all of that momentum, right, for the bears, right? That's why I require a more cautious entry to buy off the low, a bear trap with very specific entry to buy off that low, versus a breakout pullback style trade, which I can be a little more aggressive with on that one because, again, we have momentum all on our side at that point. It's just a matter of trapping some rookies in the underbelly of that range and running back down to retest the low. Now, once we retest the low, then I can be a lot more aggressive on the buy side now. I can use that two-try failure, one try, two try. Again, I'm not going to pick the bottom on that, right? Because it may keep on going lower. Sometimes we think we find the bottom, but it keeps on grinding down on us, right? So what I do know is this, though. If I see a strong run down like this, I expect that two-legged pullback and a retest of that low. Once I get a retest of that low, everyone who sold short on that breakout pullback will likely be taking profit at that low. Horrible place to be a seller. Great place to be a buyer. The problem being a buyer, though, is we're going against all of that momentum. Momentum is the wind at your back, right? Momentum is that finger on the scale that helps you, right? It's that push in your direction. When I'm trying to pick a bottom on this, going against all that momentum, I need to have stops, right? I need there to be some stop losses to fuel that move going higher, right? Because again, momentum is so bearish at that point. I can be in a great area of support. But if I'm so bearish, it may not hold that bottom, right? It may keep on grinding down, and that can be a very difficult spot, right, to find that bottom. So a lot of times it'll make those runs lower. We'll get those bear traps on the first attempt to get that bottom, right? We'll go back up. Now remember, this may end up popping up and grinding, right? Going higher, because again, ranges love to rotate, right? Up, down, they love to rotate back and forth. So if we don't hold the underbelly of that range, right? If we come out here If we pop up and we start seeing, okay, buyers trying once, buyers trying twice, right? Lower lows in price. Okay, that is ripe for a short back down to retest that low. Okay. Remember, if it pops up like this, if it pops up and we start grinding now, you know what's going on, right? You know we're rotating back and forth in that range rotation. Go out, mark off that high, bring it down off that low, and then what do? Look left, right? Look left. Find some prior swings, and the goal is you want to get a bear trap entry off that prior swing. You want to get a failure pattern, right? A failure pattern below the 21 EMA, failures into pullback combination. This will all make a lot more sense, of course, when you get through the free video classes. And again, we know where the market wants to go, right? It wants to rotate outside of that range. We go up, we trap the buyers in, 1, 2, right? Back down again, trade that rotation, sell high, buy low, trade that rotation back and forth, right? So keep that kind of variation in mind there. But, again, if we end up rolling down, we get that bear trap off that low, we then go back and retest that low. Again, I don't know how far it will go. For all I know, it'll keep on going lower, right? This may be the end of that bull mark. We don't know. I don't have a crystal ball. What I do know, though, is that once this thing pulls back, this is a horrible spot to be a seller. If I can grab those bears, if I can get some rookies coming in short, right? If I can get that move down, get the rookies coming in once, twice, right? Then I could buy into those stop losses. It's an easier way to time the entry, right? That way I'm not guessing. Right? I'm not getting run over, right, by a freight train as it runs lower. Great spot to be long, great spot to be a buyer, but because momentum in that situation is so darn bearish, I got to choose my spots wisely, right? And again, don't forget, after we get that failure and the market begins to rotate higher, my favorite entry pattern as we try to make our way back to that high right there, it will always be that bear trap entry to make sure we're buying as low as we can. Take some profit off at that high and leave that runner as it may try to rotate back up other side of that trading range. All right, guys? So now we know it's that bear trap off the low. It's that breakout pullback, that two-try failure, right? Again, we're not picking tops on that. We'll rope in those rookies and short back down. We do expect, in this kind of example, we expect them to want to retest that low, take our profit at that low, and again, bear traps, bear traps, bear traps. Good spot to be long, but all that bear momentum says, wait patiently, trap those bears in, squeeze those stops, and get that rotation running back higher again. All right, guys? A pretty easy game plan. Now, I know I covered a lot tonight, and I know if you're brand new to this stuff, this can be a bit overwhelming, but don't you worry. Tomorrow morning, 8 o'clock Eastern time, we're going to come out and trade together in our trade room. I can't think of any better way to learn to trade than to do it with us every morning at the opening bell. Bottom line is the easiest way to start making consistent money is to come out and do it with me every morning in our trade room. 8 o'clock Eastern time. I'll put all the important links we talked about tonight in the description of the video. Put the free class links. I would definitely start first on the free course. Learn the strategy. Get the fundamentals down. Start making money on your own. And hopefully sometime soon I'll see you trading with us sometime in the morning room with all the members at 8 o'clock Eastern time. Any questions, comments, concerns? You can always call the office. I'm always here to help out. The phone number's here on the website. Also, of course, live chat is always here available for you as well. So keep in touch if you guys have any questions along the way. All right, guys? Hope you learned a bunch tonight. Hope you use this knowledge to make a bunch tomorrow. And hopefully, I'll see you back here same time, same place tomorrow night. Get ready for what should be another great day on Thursday. Kick some butt tomorrow, make some money. We'll see you guys next time. Adios, amigo. Bye for now.